Good morning.
Cool.
I am Martina Edwards, the Chief of Strategic Partnerships for Access to Capital for Entrepreneurs, or ACE in Georgia. I'm also proud to serve as an OFN board member. It is my pleasure to not only welcome you to the Small Business Finance Forum, but also to introduce our conversation on supporting the small business ecosystem. Our esteemed guest, Administrator Isabel Casillas Guzman of the U.S. Small Business Administration, has been a steadfast advocate for small businesses championing their growth and resilience through innovative programs and policies. Her leadership at the SBA has been instrumental from navigating the challenges of the pandemic to ensuring small businesses continue to have the resources they need to thrive. Administrator Guzman's commitment to fostering a robust small business ecosystem is evident in her focus on expanding access to capital, particularly through CDFIs. On behalf of OFN and all CDFIs here that represent communities across our nation, we greatly appreciate the SBA's partnership in this critical work. Today, Administrator Guzman and OFN President and CEO Harold Pettigrew will discuss the importance of supporting the small business ecosystem and access to capital for entrepreneurs. They will also delve into how climate lending can help build resilient and sustainable businesses that deliver support to the care economy. Without further ado, please join me in welcoming to the stage Administrator Isabel Casillas Guzman and OFN President and CEO Harold Pettigrew. Thank you.
Thank you so much. Hello, hello. Good morning, everyone.
All right. Welcome, Administrator.
Thank you, thank you.
Thank you for being here with us. We have a well-caffeinated group.
Good.
That have been really energized and supporting the cause. And so I always like to open up, Administrator, because you are doing an amazing job of not only balancing direction for the work you do with the wonderful team in DC and across the country, but you are getting some travel miles in.
That's right.
And talking to many businesses across the country. Just maybe open up with some reflections just on what you're seeing across the country and sentiment from small businesses.
Oh, most definitely. I mean, I think it's really important for context, especially as we're talking about small businesses and the lending environment they're in. You know, we've just yesterday, the president announced that we've seen this small business boom across the country. 18.1 million new business applications filed. Establishment growth is just as strong on the same trend, so that we have finally small business dynamism again in this country, where you see a lot of job creation in these younger firms, and you also see births outpacing deaths. And that's where we want to be. And of course, this is in the midst of an economic recovery that has been strong by the data measures of employment creation, 15.6 million jobs created. Inflation, we got another second month of good numbers there in terms of inflation cooling. Wages have been able to keep pace with inflation, so that's been a positive in terms of people having money in their pockets to spend, which is this cycle that we're in. But it's as I travel extensively around the country, which I view my job at the SBA obviously to shepherd our programs, and fortunately I come in with quite a bit of experience and knowledge about the SBA, so I'm able to effectuate change. But beyond that is meeting with small businesses, because I've told my team we need to be as entrepreneurial, adaptive, and pivot as much as our small businesses have to. And so that means constantly learning from businesses what's happening on the ground, how we can constantly improve our programs to better serve them. And I do sense optimism. I think that when you speak individually with the businesses versus these over broader surveys where they're just sort of assessing, like, yes, there's uncertainty, I'm concerned, the economy's in question, that's very different than individually where they're making investments, they're retaining their employees or hiring employees, they're going after these contracts, or they're now online and selling to more countries abroad. So it's just, I do sense a lot of optimism, or at least, and at the very least, a thankfulness that they've been able to prove to themselves themselves, their survivability during this time, their resilience, which has made them stronger to adapt and pivot going forward. So they're sort of ready for the moment as well.
Absolutely. Now, we had a chance, can you all hear me okay without the microphone? All right, I'll use the microphone. All good.
Can you hear me okay with this?
Okay. Good. No, good deal. So last year we had a chance to talk a bit about some of your direction around Community Advantage, and certainly some of the efforts there by the agency to move the program from a long-term pilot,
yes. Long-term pilot,
long-term
yes.
pilot into permanency.
Yes.
And so certainly with the SBLC license creation, give the audience maybe an update there,
yes.
To understand where the agency is.
Well, since we promulgated our rules last summer and have implemented changes over the terms of this administration, we've seen incredible growth in our lending programs. It's $136 billion of funding has gone out through our 7A and 504 programs. This is $30 billion more than at this time in the previous administration. That's an incredible amount of dollars out the door to help support small businesses and this job creation that's happening in our country. And our mission lenders play such a key role in terms of meeting the underserved needs. I talked about the small business boom. Well, 60% of the loans that have come out from our Community Advantage lenders has been to new starts. Mm-hmm. I mean, so if you're wondering how these folks are able to believe in their dream and go after their dream, that's because lenders like you around the table are making their dreams possible. And so these programs are incredibly important, but we still have work to do. And so, what we've seen is that we've increased year over year the amount of lending that's gone through the Community Advantage SBLC, and I think stability encourages further investment. And I do think that lack of certainty for so many years really stifled the program and didn't allow us to really imagine what the impact could be. And so I'm so pleased to have those now. It's 142 Community Advantage lenders, SBLCs in our program, and that the progress will continue to flourish. And I know that as we continue to develop and iterate on this program, we stand on some incredible results to date. So I'm really proud of what we've been able to accomplish with the rule changes, simplifying the program, leveraging technology to better serve our businesses as well as you all in trying to navigate our programs.
And quick survey, and it's a little difficult to see with the lights. How many organizations here are Community Advantage lenders?
Yay.
There we go. All right. Oh, there we go. All right, let's lift those hands again. Now we got the lights up. There we go. So just to let you know, Administrator, you have your folks are in the house.
That's great. And my team's here for you all to connect with. Katie Frost is my Associate Administrator for the Office of Capital Access. I think she's back there by the exit sign, actually. She's standing there. And I know she's going to have some time to spend with you. But you have an incredible team working to support you and serving you.
I know it takes some pretty big efforts to move government programs, and I think your team has done a phenomenal job, and you have as well, Administrator, with laying out not only the vision but the why. Any updates or things to come with the Community Advantage program that you want to highlight for the audience here?
We're still committed, and President Biden has really been focused on increasing competition across the framework. It helps spurs innovation. It also helps lower prices and incentivizes great production. So we have the same approach when it comes to our program. We want more lenders to meet all our businesses where they are. There's still huge gaps. The Federal Reserve study shows that still about half of businesses are not able to get the funding that they ask for, whether that's all or none. And truly that means there's still incredible market opportunity for those who are trying to do small business lending out there. And we know that many of those are eligible, and they'll come to the SBA seeking that support through our incredible lending network. So we continue to evaluate the program. It was important for us to create the distinction when we lifted the moratorium on the small business licensing lending companies to make these licenses more effective towards leveraging our 7A program. We wanted to designate the CA SBLC to make sure that we continue to support our mission lenders in a different way that allowed for more flexible capital requirements and loss reserves. And we're going to continue to make sure that the program works for our mission lenders as you do fill those gaps, those new starts, those underserved markets, over-indexing to rural and people of color and women as you drive these programs forward. So we know that in order to create more competition, we need to spread out geographically and ensure you have the reach that you want and that you're able to grow into, and that you also have the capacity to continue to serve those businesses, not only in the small dollar range, which you're exceptional at really serving to help small businesses start and grow, but going up at a little higher amount, especially as we talk about the green economy and the lending that's happening there. So being able to expand the size and scope of this program is something we're looking into. So in the next few months, we'll be looking at some of those ways to streamline access to geography and access to higher loan dollars.
Absolutely, and we'll see if next year during the Small Business Finance Forum we get more hands raised for folks that have adopted the SBLC.
We need you. I mean, I do really think, I always talk about the fact that during PPP we had over 5,000 lenders, and SBA is over 1,500 lenders on a normal basis. We need those who hadn't done an SBA loan in 5 years, who came to us during PPP to come back and see that we've simplified the products to make certain that guarantee in a more strong way, so that they feel that they can invest in this program again.
Absolutely, and you mentioned technology, and I hear it as the underpinning of a lot of your comments here. And so I know the SBA has the lender match tool as well, that a lot of investment has gone into improving the program and getting more lenders involved. You may want to talk a little bit about the advancements that have been made in lender match and some of the technological focus of the SBA.
Yes, and it's a complete shift overall across the whole of SBA, because we've always been about providing capital to incentivize entrepreneurship in this country. But we also really find it's important that we support the revenue growth opportunities for the small businesses. Where we incentivize revenue growth is in industries or in areas that we know good jobs are created, where our nation needs our small businesses for innovation and competition. So trade, we incentivize trade with our programs, with higher guarantees or with grants to do international trade. We incentivize government contracting with sole source authority for the federal government to leverage contracting. Well, the new area is digital. Small businesses adopting digital technologies during the pandemic just shot up, and we need to maintain that cadence. Whether that's the e-commerce related businesses that are trying to tap into a market globally that's 5x the e-commerce marketplace here in the U.S., or it's just adopting digital technology to improve efficiencies, because McKinsey study recently said that small businesses are half as productive as their large businesses, and so we need to help them. So we've added this whole other component at the SBA in addition to government contracting and trade, and that's digital adoption. And so we hold ourselves responsible for meeting our businesses where we want them to be, online, digitally savvy. And so we've invested heavily in technology to streamline access to our programs, and we launched My SBA as a one-stop shop for our small businesses to come into, to get certified, to get bonded, get loans. And we have this lender match tool now on the My SBA platform, so that the 50,000 a month of small businesses that come to lender match specifically to connect to a lender have a stronger tool that connects them to lenders more easily. And the improvements we've made have been on the borrower side and the lender side. For those of you out there, we know that the small businesses are more likely to go online, especially in underserved communities. The Black community in particular, more than half say that they go straight online instead of to a bank. But so we want to meet them there. And we also want to, reduce those acquisition costs for our lenders as well, because SBA is a go-to source for small businesses seeking information. So The borrower side, we simplified it so that now, instead of waiting for emails, you're able to see the different interest offers that you have out there. And it's a simplified platform. And for lenders, we wanted to level the playing field, make sure all lenders, not just the big ones with the whole team sitting there on Lender Match taking all those leads, were able to access it, so giving that 48-hour waiting period, but also making sure that it's not just a cold lead, that the whole exercise of going through Lender Match with the SBA wasn't going to be futile. And so we've turned those cold leads into warm leads, and pre-screened for eligibility, which creates more certainty in that guarantee as well. Simplifies your job out there with the SBA product. So we're really happy about the changes, and now with the investments in this new technology, we're going to be able to continuously iterate. So you all saw who Katie is. If you have any feedback on how this can continuously evolve, obviously we'll roll out Lender Match 3.0 and beyond. And this is a tool I'm particularly proud of because we launched this during Obama-Biden with the intent of knowing how many people come to SBA.gov. We were like one of the most popular sites in government. We wanted to give a tool for businesses who came there, and capital is the top issue.
Absolutely, and great way to leverage the brand as well. Now, a quick shift of gears, I guess, as well, to a topic that's near and dear to me. I'm a proud papa of a 2-year-old, or almost 2-year-old toddler.
Congrats.
Who, he's running my life right now, as you can imagine. And I know as well that childcare has been certainly a topic of importance to the administration. Prior to coming to OFN, I had the opportunity in the DC area to also work through WAKIF to work with a lot of childcare providers. I know that's been a central focus for you as well.
Yes.
And so with a number of our organizations here, and knowing that childcare providers are entrepreneurs, they operate small businesses in the service of our children. So we'd love to hear your thoughts, Administrator, and I know that's been a topic of focus for you. Certainly the role you see the SBA playing in supporting the childcare industry.
And any topic you bring up, small businesses have such a key role to play, but this is, just like any other industry, small businesses are 95% of the providers in this space in childcare, and they over-index. It's majority women as well. They have low profit margins and sometimes less than 1%. They face these challenges in accessing capital, but they're so critical to undergirding our entire economy for people to be able to go to work and be productive. I'm blanking on the number, but it's 22 to 25 billion dollars, or 22 to 28 billion dollars in lost inefficiencies because childcare gaps exist in this country. So for those employers who lose that worker that day, or for multiple days or hours, like that inefficiency really slows down and drags our economy. And for small businesses, you can't afford those losses, even less so than the larger companies. So for us, it's a core issue. Deirdre Henry Spires here from my team, from SBA. My team is also here today. We're going to be having a childcare conversation a little bit later, and she's helped to lead this childcare task force at the SBA. We've plugged in to what the administration has designated as a high priority. You saw it in the American Rescue Plan with $60 billion in funding directed to childcare providers. It was over 225,000 childcare centers supported, saving Americans money. But there's more work to be done. The president consistently puts it in his budget, and we just need action by Congress as well. Childcare is a critical issue for us because we help fund and train. And so our contributions is that the women's business centers will be getting funding to help increase their support of childcare businesses, whether it's boot camps or trainings. Also, we're going to fund the development of a resource guide so that childcare providers and folks interested in this space can plug in. But I think importantly, it does come down to the capital. And I will say that the community advantages are stars here because it's the top 5 industries funded in our Community Advantage 7A. So we really want to continue to lean in and support you all to figure out how we can better design our programs, create offerings that improve your success outcomes with childcare businesses in this country, because we need more capacity. We're under under capacity by, they estimate, like a third. We need more spots for childcare facilities across this country.
Wow. So a lot of opportunities for certainly CDFIs to capitalize more childcare providers across the country. Now, one topic that I raised a little earlier during my comments was also the increasing interest rates, and just knowing that it not only impacts and affects households, communities, our small businesses with basic essentials and purchasing power, but it also impacts lenders, particularly mission-based lenders, our team that's assembled here.
Yes.
And so maybe tell us a little bit about just some of the other programs and solutions that are available at the SBA, particularly from a secondary market standpoint or other liquidity solutions, products, programs, and things that may be available to mission lenders that can offset or counterbalance more expensive capital that's available in the marketplace now. What are some tools, Administrator, that you love to tell the group about that are available that mission lenders can access?
Well, and the Biden-Harris administration has leaned in heavily to our CDFI communities, our mission lenders, and you'll hear Vice President Harris talk about it quite a lot, the work that she did as a senator, translating into her commitment as vice president to small businesses and the CDFI community. But I mentioned earlier that certainty was part of the challenge in growing community advantage. Yes, that's part of it, getting those investors behind you, but it's definitely liquidity is the big barrier to scaling as well. We at the SBA have for a long time, of course, supported a secondary market, for our guarantees, and we know that offers a great option for liquidity for our lenders. The guarantee is special in that way and really helps, whether it's the banks keeping their dollars, but we don't count against their capital, or for liquidity to be able to sell. But it was always limited to the guarantee, in essence, unless you had scale, to sell that unguaranteed portion. And so we've been exploring from the go, wanting to add in a pooling of those unguaranteed portions of loans so that we could offer a multi-party securitization and be able to sell that additional amount up to 5%. So we want you to have some skin in the game with the 5% retained on your side, but beyond that, you were always able to scale. And there's some lenders out there, of course, who do that with those who have the larger capacity. So we are so proud that we, for the first time, launched our first multi-party securitization of the unguaranteed portions, and it just went live yesterday, I believe, or 2 days ago. So we've just now created millions of dollars more of opportunity and liquidity as these lenders who joined us in this first round were able to sell that unguaranteed portion and put that right back into the economy, right back into those small businesses, those new starts, those new entrepreneurs who keep on jumping in, and those existing businesses who need capital to grow. And so I'm so excited that we've tried to be as creative as we can at the SBA in trying to help solve some of the liquidity issues for our CDFI. And obviously it's a broader challenge, but we saw during PPP with the right facilities, the CDFI community was able to scale, and we need to continue to try to support innovation in that space, and SBA is doing all it can to make that possible on our end.
And the first step for us, though, is getting more lenders around this table involved in community advantage.
That's right.
Absolutely, absolutely. So I want to make sure we get to a couple more important topics. We've talked a little bit about, very little about climate, and that being a topic of focus. We know that there's historic opportunities now, and a lot of focus on Greenhouse Gas Reduction Fund, and certainly OFN, among many other awardees, are working to deploy capital into the industry. That'll be a heavy focus here because climate in and of itself, sure, it's an area of investment in terms of climate finance, but we know that it crosses all of our investment areas, particularly small business. We'd love to get your perspective, Administrator. We know this program is coming through the EPA, but we know there's a role for small business, and when there's a role for small business, we know that SBA is on the job.
Yes.
So we'd love to get your perspective about certainly the impact of climate and small business generally, but as community lenders, assembled here today, your perspective about SBA's role in
Yes.
connection to climate finance.
Well, most definitely, and I think it's important to just take a step back too and emphasize the Biden-Harris administration's commitment around climate and clean energy and energy transition and environmental justice. This has been the most investments in climate and clean energy than ever before, really aiming to take us to that zero by 2050, but we should be able to, by 2030, cut by half the emissions with these historic investments. And so across the administration, and it's also making, protecting public lands and cleaning up in addition to those investments in infrastructure. But we're very excited about the Inflation Reduction Act from multiple areas. And of course, it has a huge impact on small business. SBA, reminder that we also deal with disasters. We are the lender for communities impacted by disaster and a direct lender. And that, so we track very closely the impacts of climate on communities, their ability to be resilient, recover, rebuild. And we know it's devastating, of course, to small businesses who, if you don't recover within 5 days, they say, from a disaster, you're more likely to close within a year. You're most likely to close within the year, according to FEMA data. So, truly, solving climate change is vital for our small businesses and our underserved communities.
Just to say that again, though, a 5-day window that typically if small businesses don't reopen, there's a likelihood that they'll be permanently closed.
Right.
Wow.
Right.
Okay.
And, I think that you're seeing it. I mean, just visited Oklahoma sulfur, where now, the Midwest is getting hit. It used to just be Florida and Texas Florida, California, and Louisiana were the ones hardest hit. That's where the insurance problems are the most. But Midwest is getting hit really hard now too. So we have a very we're very concerned. Obviously, our portfolio is impacted as well. So we're so excited. Congratulations again to Opportunity Finance Network for being one of the GGRF awardees. We've been tracking this closely with EPA. The SBA has leaned into the entire climate agenda. We've launched an Invest in America digital hub. It's sba.gov/IIA hub to try to help small businesses plug into the resources available to them, whether it's the tax credits and rebates of IRA or as manufacturers, the energy transition credits. We want small businesses to convert. We think we have a role in not only helping the small businesses leverage and be interested in transition, but also, of course, the lenders and the green banks that are in this space. SBA's 7A product can be used fully in association with the GGRF funds that you all are receiving. And so we want to be a part, leveraging that guarantee, leveraging our secondary market and our additional facilities for the unguaranteed market to be able to support you in making these investments over and over to really take us where we need to be by 2050. So it's we hope to further these conversations, and we've already been in contact with many of the grantees and EPA to figure out how SBA can play a role in really better leveraging these dollars into the future. And as well, we want to make sure that not only do you use the 7A program to augment these funds that you receive, but know that our entire suite of offerings are leaning into this space as well, including our SBIC investments, our 504 program. We've now lifted the cap on any energy products, or any energy finance deals through the 504 program, so that you don't have a cap on how many of those, and it goes up to $5.5 million for each loan that you can acquire. There's no longer the cap. And so we're really looking forward to figuring out ways to partner as you navigate this new program.
That's wonderful. And you mentioned a point that I'd highlighted as well, that one of the points that we do know of certainty, I guess, in our work is that there's going to be disruption. And I just want to make sure we hold here a bit, because I think GGRF naturally is designed to help us mitigate future disaster in many ways, so that we can meet long-term goals to where we need to be to support the planet. But there's always this threat short-term. And you highlighted some areas there, Administrator, that I just wanted to ask you, are there ways that mission lenders could and should be focused on the potential for disruption the potential for disaster tomorrow. You know, because we're dealing with the both end of short-term disaster and disruption, helping small businesses to recover, but also certainly long-term climate effects.
Right.
Any other guidance that you would provide our lenders here?
Well, one thing is, you know, I do want to energize you all a little bit. I mean, I get approached, we have a lot of investors on our small business investment company side. There is such incredible excitement and energy about the historic level of investments that are happening in green banks and green funds around this country. Everyone wants to help solve this with you all, and you're in a very unique position having received these dollars. And so, but being able to then use that into effective energy projects around the country is going to be so important. I know GGRF hit every state and territory, but now really going in, understanding the local rules. You know, we think that the SBA's role in helping small businesses better leverage these programs will be a key partnership and collaboration into the future. We want to ready the small businesses so that they're there to receive the funds and effectuate change faster in these communities that are being so devastated. You know, I heard a recent stat from Fannie Mae that last year there were over 18 natural disasters that cost $1 billion. Like, this is just happening in an onslaught, you know, nonstop. I get multiple emails every day with my updates. I have 26 disasters declared across the country. Half of them are presidential level. And so there's, you know, massive devastation happening. So we do need to act quickly, but the positive is that everyone is very excited about these dollars and helping come up with solutions to ensure that they're put into the right places, and we want to partner with you on that. And you know, I do think you know, the SBA's program is both on the SBIC and the 7A and 504 side will be a great tool.
Absolutely. And we definitely want to make sure we end on not only positive but prospective opportunities. Not only through the SBA, but even through just your lens about small businesses across the country. So maybe, Administrator, as we close out here, what keeps you motivated? It's a difficult job, it's often thankless, so thank you certainly for all the work that you do, you and the team, but what keeps you motivated to do the work?
It's these great small businesses, and you know, I love the travel that I'm asked to do. You know, because small businesses, they're obviously not just in the halls of, they're not in the halls of Congress. They're definitely on main streets and manufacturing centers and industrial hubs, and you know, it's a pleasure to really travel around the country and meet with them because they're inspirational. I mean, you all know who work with small businesses, they're problem solvers. You know, they know that every day there's going to be a new challenge, but they're ready and arming themselves with the tools, the capital, the resources to be able to attack those problems head on because they don't give up. And they have such grit and determination. So that's been my greatest honor. And I have the privilege of having grown up in a small business family, started multiple entities. And so I understand and can talk to small businesses in a way that really gets to what the government should be doing. And I've just been honored to be in an administration that has leaned in heavily to small businesses in its whole, you know, priorities and platforms, and that's very unique. You know, I've been tracking this agency for a while, and to be able to you know, be such high priority. Of course, it's higher intensity for us at the SBA, but it's great to have small businesses and their voice at the table in all these programs. So it's a positive for our communities because they're the backbone. They create jobs, they produce, and they define our neighborhoods.
Absolutely, and as we part here, I said to all of our friends here, often a reward for great work is more work. So thank you for the job, certainly that you do, Administrator. I think we all see the advancements being made. I think we can honor the difficulty as well of what it takes to actually create new programs to improve existing ones. So thank you for the work that you do.
Thank you.
This is always a home for you,
Yes.
this stage and certainly this industry, and know that we're all partners in making sure that the SBA is successful as well.
Thank you all for your work.
Thank you.